morning, everyone, and a very warm welcome to the GM platform. So we are conducting a live market webinar today with the idea that once you take up a position on intraday basis, how do you manage? What data should you see? How do you go about reading the market? Because as we know, in last almost 6 months, markets have been quite volatile. Except for a month or two when the markets were pretty stable and not going anywhere. So that's what we are coming to. But it's very interesting. The market is very interesting today. Before I start off anything, I just want some of you, all of you all can answer. You can put your answers in the Q&A column. How many of you think the market is going to be positive today? Or rather, let me put it, how many of you all are going to take a long trade over here? Right? I'm not answering this question, but we'll come to this later as we proceed through the entire presentation. So now what are we going to cover in the presentation today? So why derivatives? Why should one start looking at trading in futures and options? Once you have made up your mind to start trading in derivatives, then what are the things that you need to see? So EOD data reading, that is end of the day, whatever data comes in, futures data, options data, open interest data, what all data can you read? And make up a mind that tomorrow market may be going to so and so level, or at least you find a direction to the market, if not the perfect precise levels. Then we are going to look at live market option chain analysis. This is where we are going to address the first question that I put in forward to you, whether we are looking at a positive market today or are we going to see some more selling. And that's only intraday, so even if you go right by say around 40-50 points, you are absolutely right in that. Data will keep changing, and we'll see how do you keep reading the data intraday changes in open interest on the option chain analysis. Then we come to the point where we have to decide whether are we going to take intraday trades, or should we form should we take up a trade which we can carry forward overnight or Monday or maybe for next 1 week. I request all of you to be on mute, please. That's my only request today. Okay, and then we are going to see some of the weekly expiry strategies. If you're only a buyer in options, or if you're only a seller in options, I don't think there is any person who has ever made returns by sticking to just one strategy, only buying or only selling. Somewhere or the other, you do take a hit. So then how do you navigate through this particular problem, and how do you decide whether you're going to be a buyer or a seller of options? I'm not talking about the market direction. I'm talking about being a buyer or seller in options. So we are going to see some of the strategies wherein this problem will be solved. And lastly, we'll just touch upon this topic on stock screening. What are the first few parameters, or how do you see as a retail investor, if you do not have systems in place, if you do not have big please be on mute. So if you do not have any big softwares and all, as a retail investor on daily basis, where do you see the data? How do you go about screening out stocks that look good for investment, that look good for intraday trading, as well as that look good for trading for next probably a very short term 5 to 6 days time. So firstly, this is the monthly chart for Nifty. Now if you see this particular bar that is there, the horizontal bar, market has not really gone anywhere. It's been in a range, and if you look at your portfolios also, you'll see that the dream rally that we had seen post COVID from 2020 onwards till 21, 22, it was a dream rally. Every person was making returns in the market. They were generating returns. Their portfolio was increasing. But what has happened in last 1.5 to 2 years? It has really baffled out most of the stuff. Yeah, so a lot of student community had started. Colleges were closed. Everything was under a lockdown, and a completely new community had come up who started trading in stock markets because that was the only thing going up, and it was the only thing you could sit at home and still make money. So these were this particular community has faced a lot of problem. They saw the actual reality in last 1.5 years, and now they are facing the music of it. But we are more than eager to help these guys also. There are some veterans who have joined this session, and there are newbies, so we'll be addressing both. And I hope this session will help you further in your trading strategies as well as investments. So yes, why derivatives? Now, if you see this blue box over here, in FY22, what was the participation in index options? And in FY23, what was the participation in index options? So if you look at the percentage change, the participation has almost gone up by 79 to 80%. So more and more people have become informed. They are finding newer avenues to trade in markets because cash markets will see a bull run in probably 4 to 5 years, once in 4 to 5 years, and then again you may see some slack period. So what do you do then? So that is wherein you can start trading in options and generate a steady return. We are not looking at generating like 50-60% returns that a lot of these Twitter guys and all claim, but a steady income is what is more important. And if you look at the graph over here, the bar graph on the right hand side, the blue bars that are there, that is the cash segment, and the orange bars that are there, that is the FNO segment. Now look at the increase. What was the participation in 2017 and where is it going now? So this is the kind of trajectory that the options market is providing, and that is why for all of us it will be a good idea to get into derivatives and find a newer avenue to make returns. Now we're going to look at the daily report that we send out every morning. Now this is just a ready reckoner. I hope this is visible. So this ready reckoner report gives you a snapshot of what has happened on the previous day and how is the data placed. Now this will help you on next day to be prepared about what are you going to do in the market. So the Nifty levels are given, and on the right hand side it's the Bank Nifty. The key support levels are given. There are two support levels given, 18,112. This is today morning report. So support 1 for the day, 18,112, that has already been broken, and the second support is at 18,044. Okay, similarly for Bank Nifty, it is 43,661 and 43,514. The next row gives you the resistance levels for the day. Then you have the exponential moving average, the 50-day moving average and the 200-day moving average. So this particular report in a single page will give you a complete idea of what is happening in the indices. Then there are some derivative parameters over here. Where is the highest open interest in calls and puts for both Nifty and Bank Nifty? That's given for 29th June, the next monthly expiry, as well as this now it's a monthly expiry only, so 25th May expiry also. Where is the highest open interest placed? So as of now it is at 18,200 call and 18,000 put. This is as of yesterday EOD data, that is on closing basis. Then you have OI change. What happened yesterday? So there was an addition of 1.86% open interest in Nifty. There was shedding in Bank Nifty. Then you have the basis, the difference between the spot and the future. Then you have OI PCR ratio that is given for both Nifty and Bank Nifty. And where is India VIX trading? Now a little technical part. The next row gives you the ATM call and ATM put premiums, and what is the combined premium. That usually will give you a range for the next week or for the next month. Now whichever options you consider, if you're considering a monthly option, the ATM call and put combined premium will give you the range. Say for example, now Nifty is at 18,200. Your 18,200 call and put combined premium is around 550. So for the next month. So what range are you looking at? It is 18,200 minus 550 and 18,200 plus 550. This will be most probably the range within which Nifty should trade in the next month. Then lastly, on this particular report, we have the participant-wise total open interest. So participants, we have clients, that is the retail clients, we have FIIs, and we have the prop desk. These are the major participants in the market. So what is their positioning as on yesterday's close? Now here, the piece of data that we look at will come to the next report. It's clearer over there, which is the FII derivative statistics. One good thing that exchange has done, breakup of positions in indices. That is, whether FIIs are, what are they doing in Nifty, Bank Nifty, Fin Nifty. Individually, they have started giving us data. Initially, earlier we only used to get what was the breakup in index and what was the breakup in cash. Now we are getting individually in each of the index what is happening. So firstly, the long short ratio, that is FIIs are 49% long and 51% short. Now this for FIIs is a very good ratio. So this had gone down to almost 10% a month back when we were at around 16,800. And gradually we have improved. I mean, FII participation has improved. The ratio has gone up, and we are already seeing where the market is. It's almost 2,000 points higher from those levels. Then we have for the first, from 1st May onwards till date, what has been the participation? So in index futures, FIIs have been a net buyers of 1,410 crores, rounding it off. And in index options, they have sold dramatically. Like we have a selling figure of 25,880 for this month, for the month of May, from 1st May till date. Now, this is on daily basis. The next, this particular area. In Nifty futures, if you see, in Nifty futures yesterday, there was buying of 204 crores, which tells you that they are slightly bullish. Now, all these figures, we are not looking in individually. We are going to look at it in totality with all other parameters also. But this is an important piece of data because FIIs are a major participant in our markets. And a lot depends on what FIIs do. In index, there was a huge long as in they were buyers in options, almost to the tune of 11,740 crores. This was the index options figure. Now, from that particular figure, Bank Nifty options, the buying figure was a little less, which was around 189 crores. Then what did they do in stock futures and stock options? So they were sellers in stock futures. So buying in index futures selling in stock futures, and a huge buying in index options. This, from the face of it, tells you that whenever there is a long figure in index options, you have to be really, really careful. Now, what are the daily FNO parameters that we look at? So, FII long short ratio, as I showed you. Now, these reports are available to all the clients. Every day it is mailed as well as shared on WhatsApp groups. So, you can refer to these reports to get an idea of what is going to happen today in the market. And then you go about in the live market. How do you see what other parameters are you? So FII long short ratio, put call OI analysis, open interest analysis. Now we'll come to that. Then India VIX is a major factor again. OI PCR, that is the open interest put call ratio. It is simply a ratio of total puts in the system divided by the total open interest of calls in the system. And then the last two parameters are for screening purpose. What do you look at? OI spurts, heat map. We'll take these, I'll take you through the screens one by one. Okay, so just let me go through what have most of you all answered. So you can put in your queries. I don't mind taking up queries in between also. But just be on mute. You can put it on the Q&A session or the chat session. Okay, some of you all are asking, where do we find these reports? The Reddy Reckner report and the FII statistics. So if you're a client with JM, you'll get a email, as well as if you're there on the broadcast group. Once you're a client of JM, then the reports will be mailed to you. It's a simple NSE website. And for intraday, what are we going to look at? So this is the option chain for Nifty.
No screen visible.
See, in case if you're not able to see here, because it's a NSE website screen, you can open at your end also NSE website and go to option chain, Nifty option chain. It's important that you see this option chain on daily basis. The reason why I asked you this question, whether how many people are positive and how many people are negative on the market today.
Perfect.
Can you please be on mute? Request all of you to be on mute. It disturbs everyone, please. Okay, so while I asked you this question, Nifty was at 18,075. And yes, a lot of people said that it's going to be positive. I'll tell you the reason why I was also positive that there will be a bounce back in the market. You look at the option chain. On individual strikes, if you see the open interest. Now, as of yesterday, we saw that 18,000 put has the highest open interest and 18,200 call has the highest. Now, for intraday basis, you look at how the OI buildup is happening. When market went below 18,100, if you notice, 18,100 put open interest was around 1,50,000. And the open interest at 18,100 call was around 1,45,000. Now, in spite of Nifty breaking 18,100, we did not see any kind of shedding at 18,100 put. Now, how do you calculate open interest, put call ratio for individual strikes? So, if you open this NSE website, option chain website, on the option chain, for one particular strike, whichever, now we are looking at 18,100, you look at the total open interest of puts. It is at 1,58,000 currently, and the total open interest at in calls is 1,52,000. So you calculate the put call ratio by dividing the put open interest, that is nearly 152, divided by 158 divided by 152. It is nearly 1.03. Now, whenever at any particular strike, if the open interest is above 1, the put call ratio is above 1, you can assume that that support is going to hold. Only the moment it goes down to say around below 0.90, that is when you get a confirmation that market is not going above that particular level. Now this you can use it for intraday basis also, and for creating any carry forward positions also. So currently 18,100, in spite of Nifty breaking 18,100 level and trading way below 18,100, the reading that was there was that there was no shedding in 18,100 put, and the put call ratio at 18,100 remained above 1. That was an indication that we might be seeing some pullback for intraday. And okay, now let's see where the market is. Currently, it did go up to around 18,157 almost since the time we started this webinar till now. So for intraday basis, if you're getting a movement of 50 to 60 points, you can assume that it's a pretty good movement. And on options, if you have to take a trade based on this, you would go for, whenever you are buying an option, and that too for intraday, stick to ATM options. Do not go for very far away options. You can go for either 18,100 or 18,150. The reason for that being that you'll see the highest movement in very close strikes. Far away strikes may not increase or decrease as much. So there are two rules. Whenever you are expecting a big move, say around 400, 500 points away, okay, and you are confident about it, that is when you buy some option which is far away. Maybe if I have a view that market is going to go up by 500 points, today I'm going to buy 18,500 call at 6 to 7 rupees and sit, because I'm confident that market is going to go above 18,500 or up to 18,500 in next before this expiry. So in that case, you can buy these cheap options and sit, but till the time you are trading on intraday basis, go for very, very close ATM strikes for buying purpose, because those are the strikes that will give you faster movement and a bigger movement, so that on intraday you can immediately get in and quickly book out profits also. So 18,100 call was trading at around just a sec, it was trading at 72 and it has gone up to, currently it is at 130. So this is the kind of return that you make on intraday basis. Now, any guesses from current level, where are we going? You can again share your opinion on the chat. Okay, in the meanwhile, till you all make up your mind and see the data and you decide where the market is going, I'll take you through some of the strategy part that you can trade in. Since it's a live market webinar, you need to be a little patient, because we'll have to check the data on live basis. Okay, do we have some answers? Sideways, yes, between 18,050 to 150. It does not cross 18,200. Okay, this is a very interesting answer. We do not have a view. This happens a lot of times when we do not have a view that where the market is going, how much it is going to go, but we know that it is not going to cross a certain level. Okay, so we have a very interesting answer over here. Someone has said that it will not cross 18200 call, a 200 level. From a current level, it may come down or it may go up a little more, but it will not cross 18200. Yes, so there's one more person who says that there's a good resistance at 18225 on Nifty futures. High probability, okay. Will go till 18200. Yes, so thank you all for answering this. Now we'll see why 18200 is possible or not possible, or even if it is possible, then what strategy do you take? I'm going to share another screen. Just give me a minute. Okay, is the screen visible? See, this particular, it's an Excel that we have made it in-house. You have a lot of softwares also that you can use. And this was one particular strategy that we had initiated yesterday. You will not find the strategy anywhere in any of the textbooks. This is purely based on analysis and trying different types of combinations, because the standard textbook strategies, everyone reads about it. You need to be a little smarter than the market. You need to evolve yourself in the dynamically changing market. So this is a particular strategy. I'll give out the trade secret for this, and you can apply that. You can do your paper trades on stocks as well as index. So here what I'm doing is, okay, is the screen visible now better? So from yesterday's data, we had a slightly negative view for the day. Okay, but was it possible that markets were already closing at day's low? Would it make sense to simply buy a put and go? The risk was higher. Today, if the market opened even on a flattish basis, we would have lost premium because it's a Friday. Then we have next 2 days, which when the market is going to be shut. So the time value depreciation in weekly options is very, very fast. So in such cases, when you want to carry forward any position for the next day, overnight, you have to take a position. It's better you go for some kind of strategy. Okay. Now here what I've done is, I bought 18200 put. I have sold 18100 put, and I bought 18000 put. But the ratio is 4 longs at ATM, 6 shorts at 1 strike. Now the difference between the strikes has to be equal. So 18200, 18100 and 18000. These are the strikes that I selected. I bought 400, I sold 600 at 18100, and I bought 200 quantity of 18000 put. So the ratio is 4:6:2. This ratio will do all the trick, even if you apply the same strategy in stocks also. At the beginning of this month, we had initiated this particular strategy in one of the stocks, and it actually gave very good returns. And these were the rates where yesterday's execution was done, 100, 65 and 33. Now we'll see what happened today. We have already booked out this strategy. See, the booking prices are 137, 87 and 50. And this is the profit figure that was booked today morning. Now this 5,000, you would say that 5,000 sounds very low. But if you actually see the returns in comparison to the margin utilized, see the margin utilized was 3,95,000. Okay. Now on a margin of 3,95,000, 5,000 profit is what percentage? It's more than 1% in a single day. You take a trade at the end of the day, and next day morning you are booking it out. So 1% in one day is a pretty good return on options, and you are getting a quick in and out of these strategies. So when you keep doing the strategies on a regular basis, and keep devising your own strategies with a very controlled. Now see, the beauty of the strategy was, this is the payoff table. Okay, in this case, what would have happened if at all Nifty remained above 18,200? Okay, my loss is fixed. Not that I will keep incurring higher and higher losses if Nifty kept moving up. But if it went in favor, now at 18,100, this particular table is as per the expiry. But on intraday basis, or even on a single day to 2 days time, you can book out profits. You can hold on to this strategy if your view is very, very clear. 18,100, the option that you are selling, okay, you'll see the maximum profit at the end of the expiry. If Nifty expires at 18,100, 32,400 is the profit figure that you might make. Keep a watch on this particular strategy. You can keep tracking it for the next 4 days, and on 25th you can see how the strategy works. Okay, and on daily basis also you can keep monitoring that when Nifty goes up by 50 points or 100 points, what is the difference in the M2M? If it comes down further, what is the M2M that I'm looking at? Okay, on daily basis you can keep tracking. If you find the strategy very interesting, you can keep applying it in stocks also. It works beautifully in stocks. Only two things that you have to remember is, one is that your loss is fixed in this. If it does not go in your direction, profit is also going to be after a point locked. So below 18,000, anywhere if it goes to 17,500 also, my profit is locked at 12,400. Okay. The difference between the strikes that you select should be equal. Only then this ratio of 4:6:2 will work very well. So this strategy you can apply for intraday also, but with closer strikes, with a difference of probably 50, or even if you're taking a higher difference, you will still make money in this particular strategy. Okay, now there is one. So since we have a lot of people with a bullish view, that in next 2 days, Nifty is, might go to 18,300, 400, if that is the view. Give me a minute, I'll share another. Anybody of the view that Nifty will touch around 18,300, 350 again? $18,500. Yes, we have someone who's pretty bullish. I'm talking about this weekly expiry. I mean the monthly expiry, May expiry, 25th. So the time frame is 5 days, 4 days, 5 days. Not today. We are not talking about intraday. In next 4 to 5 days. 18,324, 18,300. Yes. So we do have a lot of people who are assuming that Nifty will go up to around 18,300. And yes, we do have people who say that it will not go there at all. Yes, Mr. Ashish, I'll repeat the strategy, but now we are changing the view. Okay, since we have a lot of people who believe that Nifty is going to go up to 18,300, 400 in next before May expiry, I'll give you the same strategy for the monthly expiry of 25th. We'll look at the live prices, put in the prices, you can take the trade and then keep monitoring for the next 4 days, see how it works. Okay, so I'm going to share the Excel again. I'll just increase the font size so everyone can see properly. Okay, 18,300, we have a consensus that it will go up to 18,300 average consensus. So as I said, that whichever strike you sell, that is where you will have the maximum profit. So let's keep 18,300 on the short side. Your ATM from here, I mean the closest strike from ATM is going to be 18,200. See, since market is currently at 18,145, right? So we go for 18,200 buying, 18,300 selling, and 18,400. So we are taking 3 strikes at a difference of 100. Okay. We are going to deploy the same strategy in the ratio of 4:6:2. That is, so you can also say 2:3:1, right? We are buying 18,200. We are taking live prices currently. Okay, I'm on the screen. 18,200. It's trading at 80 rupees. I'm just averaging it off. So we are buying 400 shares at 80 rupees. 18,300 is trading at 40 rupees. And 18,400 that we are buying is at 18 rupees. Okay, let's see how the payoff occurs. Okay, now if you see, look at this B column. If you see, the risk reward is not really favorable in this case, because if you lose, if it remains below 200, what you're going to lose is 11,600. If it comes exactly at 18,300, yes, you are going to make 28,400 rupees. But if it goes above 18,400, you are going to make just 8,400. Okay, for this particular strategy, risk reward is not favorable. If you are absolutely confident that it will move up to 18,300, you can go for this, or you can tweak around a bit with your strikes. Now, instead of 200, 300 and 400, if you select 250, 350 and 450, you'll probably get a better risk reward ratio. Both these strategies, both these combinations of strikes will work in a similar manner, but the risk reward will be a little more favorable in case if you select a slightly outside strike, which is 18,250 for buying, 350 for selling, and 450 for buying again. Okay, so if you want to jot down, please jot down this trade. Also, for your own purpose, jot down the prices for 18,250, 350 and 450 combination also in this particular ratio. Okay, this is very important. The ratio is very, very important. Now, again, the beauty of the strategy is that tomorrow, if at all something happens overnight in US or anywhere around the world, and you see a sudden gap down opening of 400 to 500 points on the downside, okay, which is totally unaccounted for. None of the data points are suggesting that there will be a gap down of 500 points, but overnight risk, unprecedented events can occur in the market, and if something like that happens, your strategy will never run into unlimited losses. That is the beauty of it. Even tomorrow, if it opens at 17,500 also, you already know the risk that you are taking. Your loss is never going to go up above 11,600. So, this will help you commit your funds properly, as in whatever risk you decide that I will take up a trade wherein I'm ready to lose not more than 50,000 rupees. Accordingly, you can select the quantities that you are going to trade. So in any kind of trading pattern, trading system, managing risk is what we give utmost importance to. If you can manage risk, generating returns becomes easier. It's a part and parcel, because if you're trading in market, you are going to go right at least 70 to 80 times. And if you're not able to do that, then obviously it is not your cup of tea, right? So all of us who are into this thing, it's not for fun. We are here to generate returns. So only thing that we have to manage is our emotions. Never get into some trades wherein for the sake of recovery, I want to make more money, or I want to recover more money, so I'm going to take up a big trade. No, if you want to take up a big trade, do take up a trade, but go for strategies wherein you, in case if something happens overnight, you are going to lose a fixed amount of money. It will never exponentially wipe out your entire capital. Okay, that is something you need to take care of. That's a more sustained way of trading in the markets. You'll go a big way in the long run. Okay, again, the margin part of it, in this particular ratio, your margin is going to be somewhere close to 3,95,000. Okay. So, yes, now this was the strategy part. Now, when do you decide what strategy to go for? Okay, now so whether you need to be an intraday buyer, a naked buyer, or you go for a strategy, or you go for a two-leg strategy, which is a simple buy and a sell. You buy 18,100 and you sell 18,300. So for answering that, if you have a quick view that from here it's going to go up by 50 to 60 points in next 10 to 15 minutes, that is when you buy options and immediately book out profits, and you do a quick in and out of the trade. If you are of the opinion that Nifty may go up a bit, but it is not going to go above 18,300. Okay, in that case, you can rather go for instead of buying options, because you're not very sure it may go up to that level. In this case, selling of options comes into picture. 18,300 will not be crossed. If that is the view, you sell 18,300 call, but at the same time you buy 18,350 or 400 call also as a hedge, so that in case if there is a runaway rally up to 18,700, again your stop loss, you do not have to keep a stop loss. Your loss is fixed, and it's not going to incrementally keep going up with the markets. So again, I'm coming to the point wherein you need to have a very robust system where your stop losses are fixed. Okay, out of 12 months, even of 3 months, you keep hitting stop losses, but in the next in other 9 months, if you make consistent returns, that is going to help you generate returns over on the annual basis. You'll be on a positive note. Okay, now so this was the strategy part of it. Okay, this is the first live market webinar that we are conducting, and we'll be conducting more and more such webinars wherein there will be a lot of topics where screening out now for intraday basis what stocks to buy, what stocks to sell. That also there are certain rules, certain tricks that we have. I'm going to share those also. I'm going to share a screen again now. Okay, I'm going to share the entire screen so you can, once I toggle, you will know what are we looking at. So one is option chain that you saw, right? Now coming to stocks. Okay, I'm only going to touch these topics, give you a rough idea of what we are going to do. Further analysis, whether to take up an option trade on this or you go for futures, we'll be discussing in the next webinar. And with every proceeding webinar, live market webinar, we are going to go deeper and deeper on how on a daily basis, only through simple websites, free websites that are available here, how you can pick up your trades for intraday or for a very short trading period of 1 or 2 days. So for intraday basis, you have the NSE website here. Search OI spurts. See, if you see, now usually the first few OI spurts will be in index only. If you see the names here, it's Fin Nifty, Bank Nifty, Midcap Nifty. Then we have Bata India, Ramco Cement. Okay. Now let's see what is happening in Bata India. So Bata India, the stock is up. Okay, that is a positive price movement. What is happening on the open interest front? In the option chain, you can again go and search what is happening in Bata. We had opened Nifty option chain. Now we are going to look at the stock specific. Now see what has happened in Bata. If you notice here again, change in open interest, the second last column, we have seen a lot of shedding. Shedding is when the open interest goes down. Okay, at 1520, 1530, 1540 calls. And the right hand side is the puts open interest. Again here we are seeing a lot of addition at 1540 put, 1550 put and 1560 put also. Then the last two columns that you have, if you see, the highest open interest is here. This strike is 1600. It clearly indicates that the bullish momentum is on for Bata India. We can probably go up to around 1580 to 1600 levels in this particular expiry. And in case if you want to take up a trade, go for the strategy that I mentioned. The 4:2, the magic ratio that we have for trading options, that is 4:6:2, or you simply go for a 1600 call strike. Now, since we have just 4 days to expiry, the biggest risk in buying a vanilla call option is that in case if the move does not happen quickly, your view might go right, but you may lose money because your option premium is going down because of the time value decay. So to avoid that, you can also go for 1600 call in the June series instead of May series, because your view is positive, but you don't want option premiums to just depreciate because the time value is less. We only have 4 days to go for the monthly expiry. So instead you can go for a 1600 June call for this particular stock. Okay, this is, as I told you, I'm going to give you a rough idea how do you go about searching stocks for trading. Intraday also you will see a good move. For intraday, if you want to trade this stock, it's already up, but you should be going for an ATM strike on the buy side, which is about 1540 for this stock. Okay, there are some more queries. Give me a minute. We'll come to the queries at the end now. See, another thing that you can search. Now, what is happening? Like, you have so many stocks, okay? But how do you select which strike to go for, what stock to go for? You can simply type heat map. Go to Google and type heat map. Okay, you have a lot of websites, lot of free websites, which will give you a heat map. Heat map is basically it will give you which stocks you will have a universe. Now here I've selected Nifty 50 universe. You will have a number of stocks, what is happening where, along with the color coding. Okay. Now if you see NFI is on the positive note. Reliance is flattish. So gray, your color coding is darker the green color, higher is the movement in that particular stock. See, Tata Motors, it's up 2%. Tech Mahindra, so you at least you know that what is happening in the top 5 stocks. Which are the stocks in the top 5 category that where the action is today. This is very helpful for selecting stocks. Now then you can get into deeper analysis of on options, on futures, or if you're a technical analyst, if you can read charts. Okay, then on the charts you can see if we get any intraday opportunity to trade in these stocks that are active today. Okay, so that's about it from my side today. We'll take up all the questions, all the queries that you have. And don't forget, we are going to have more webinars, more live market webinars, wherein we'll get into more and more details. And you can connect with us even post this webinar. So I will share my email ID. Yeah, you can note down.
If you like, I would use the communication and the
You can put queries in the Q&A section or the chat box.
Thank you, Avni, for that fascinating session. Like Avni said, can you, if you guys have any questions and all, just put it up on the chat, and then Avni can take a few questions that are submitted.
Shantanu, I think I'm reading a lot of queries. Wow, someone is saying FT expiry should be 1700. Yes, possible, Mr. Vijesh. Yes, possible. But today, as we saw, we were looking at intraday data reading. So intraday, we got our movement of 40-50 points. Yes, options payoff file. Yes, the Excel file we will be able to share. Not a problem. Once you're, if you have registered and joined this session, then we will have your email IDs. In case if you have joined directly through the link, it will be better if you can mail us your request. I'll share my mail ID and my phone number. Just give me a minute. So my name is Avani Bhatt. I hope it's visible to everyone. Right. This is the email ID. That's the phone number. So you can connect with me on this. We have an entire team. So the next webinars that will be taken by my colleagues also. And all of us are available at your disposal. Whenever you require any kind of help, any kind of guidance, you can connect with us.